Hello and welcome back to Global Value. In today's video, we'll be performing a fundamental stock analysis of Adobe Inc., ticker symbol ADBE. At the time of recording this video, Adobe is currently trading for just under $400 per share. Year to date, Adobe's down quite a bit, down about 30%. Over the past year, Adobe's down 17%. However, going back 10 years, Adobe has done quite well. Even with this decline, Adobe's returned nearly 29% compounded annually, far outpacing the S&P 500 and most other stocks during this period. So Adobe's trading for about $30 over their 52-week low, which is down quite a bit from their 52-week high. Adobe is a very large business. They have a market cap of nearly $188.5 billion. So in the most recent 13F filings that have come out, Adobe has been made a recent add to Terry Smith's Fundsmith portfolio, and Acri Capital Management, Chuck Acri's firm, has also added to their small Adobe position. So Adobe is a small position in two well-known super investors funds. So for some background about the business, Adobe provides content creation, document management, and digital marketing and advertising software and services to creative professionals and marketers for creating, managing, delivering, measuring, optimizing, and engaging with compelling content. It operates across multiple operating systems, devices, and media. The company operates with three segments: digital media, content creation, digital experience for marketing solutions, and the publishing for legacy products, which is less than 5% of revenues. The company was formerly known as Adobe Systems and changed its name to Adobe Inc. in October of 2018. Adobe Inc. was founded in 1982 and is headquartered in San Jose, California. So with that background about what Adobe does as a business, let's get right into our fundamental stock analysis. We'll be performing an 8-pillar analysis as popularized by Everything Money to take a look at 8 different key attributes of the company, looking at their financials, and coming to a beginning understanding of the business. So pillar number 1, we want Adobe's average 5-year PE to be below 22.5. Currently, Adobe trades at a 39.5 PE, and over the past 5 years, they've averaged a PE of about 53. So pillar number 1 is going to be an X to start off. Pillar number 2, we want Adobe's average 5-year return on capital to be above 9%. Adobe does really well here. They average a 5-year return on capital that's about 23%. Over long periods of time, a stock is going to perform as well as its underlying business performs, and the business's underlying returns are going to be their returns on capital. Basically, what kind of return is the business able to get on the money that they reinvest into the business? So that's a check on pillar number 2. Pillar number 3, we want to see 5-year revenue growth. Adobe's done well here. They've doubled revenues in the past 5 years. Pillar number 4, we want to see 5-year net income growth. Adobe's done really well here too. They've tripled net income in the last 5 years. So we've got 3 checks in a row on Adobe. Pillar number 5, we're looking for decreasing shares outstanding. We don't want a business to be issuing new shares and diluting existing shareholders, as it ultimately means that we're entitled to a smaller ownership percentage of the business and less of the business profits. Instead, we want a business to either be keeping their shares outstanding flat, or we want them to be buying back shares when the business is priced appropriately. Adobe's been doing just that. They've reduced their shares outstanding from 501 million in 2017 to 481 million in 2021. So they've been buying back shares, and that's a check on pillar number 5. For existing owners of the business, they've increased their ownership percentage of the company over time. Great sign here. Pillar number 6, we want to see 5-year free cash flow growth. Free cash flow is this column in green. Free cash flow is the lifeblood of any business. It's cash from operations minus capital expenditures. It can be used to pay dividends, buy back shares, pay down debt, make acquisitions, and reinvest back into the business. Over this time period, Adobe's increased their free cash flow by about 2.5 times. So they took it from $2.7 billion in 2017 all the way up to nearly $6.9 billion in 2021. Averaged out over these 5 years, Adobe produces about $4.5 billion of free cash flow each year, and that's been steadily growing. Another thing we can see based on this free cash flow profile is that Adobe needs to invest very little money in terms of capital expenditures relative to their cash from operations. That makes sense based off the high returns on capital that they're able to generate. Pillar number 7, we're looking at how the business utilizes leverage. So we want Adobe's net debt to be below their average 5-year free cash flow multiplied by 5. Net debt is long and short-term liabilities minus cash and equivalents. And here, Adobe has negative $1.1 billion of net debt. So what this means is that after paying off all their long and short-term debts, Adobe is left over with $1.1 billion of cash and equivalents. So that's a check here. Adobe has over $1 billion of cushion on their balance sheet, and that means that they're in a very strong financial position. Finally, the big pillar of them all, pillar number 8, we want Adobe's market cap to be below their average 5-year free cash flow multiplied by 20. This will help us come to a reasonable valuation of the business based off its free cash flow profile. So currently, Adobe has a market cap of $188.5 billion. Multiplying their $4.5 billion of free cash flow in an average year times 20 only brings us to $90 billion, so less than half of their current market cap. So pillar number 8 is going to be an X. So in summary, Adobe checks the box on 6 out of 8 pillars. They're only off on our valuation metrics, but based on everything else, Adobe looks like it has a very solid balance sheet. It's experienced a lot of growth over the last 5 years, and their return on capital and their ability to produce high amounts of free cash flow without the need to invest heavily in CapEx makes Adobe's underlying business one of these top tier businesses. Even though Adobe looks expensive based on this, it's not surprising that it was added to Terry Smith's Fundsmith portfolio, which looks for businesses that are trading at attractive free cash flow yields, as well as producing high returns on capital over time. And it's not a surprise that it's found its way into Chuck Aukrey's fund, which is looking at long-term compounders exclusively. Going back all the way to the company's IPO, Adobe is actually a 1,000-bagger company, meaning for every $1 you invested in the business, that dollar has now turned into $1,000. So if you had invested $1,000 into Adobe at its IPO and held the shares consistently, that would now be worth $1 million. That's the caliber business Adobe has been. If you're interested in getting a deeper understanding of the business, I highly recommend reading through some of Adobe's annual reports and diving into their recent 10Ks. That should help to better understand the business's competitive positioning and understand what its management's strategic plan is for the future. So that's it for today's fundamental stock analysis of Adobe Inc., ticker symbol ADBE. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what company you want me to take a look at next. Thanks for watching, thanks for learning about Adobe, and have a great day.